All right, let's talk about Japan's office market because things are getting really interesting. We're looking at the latest data from November 2025, and it's painting a pretty wild picture. Think climbing rents, disappearing space, a real squeeze. So today, we're going to dig into the numbers and figure out what is really going on. Ready? Let's dive in.
Okay, I want you to focus on just one number, 22. Honestly, this one number tells you almost the whole story of what's happening right now. So, any ideas what it could be?
Yep, 22 months. That is how long office rents have been on the rise, nonstop, in central Tokyo. We're not just talking about a little rebound here. No. This is a sign that the entire market is shifting into a new gear. So let's break down exactly what's causing this. Okay, first up, let's zoom in on the epicenter of all this, Tokyo. We're calling this section Tokyo's office squeeze. And trust me, when you see the data coming out of the capital, it's pretty staggering.
Check this out, 2.44%. That is the vacancy rate in Tokyo's 5 central wards. I mean, that is tiny. And what's more, it's been dropping for 9 straight months. To put it simply, finding an empty office in central Tokyo is getting tougher and tougher.
And we all know what happens when supply goes down, right? Prices go way up. Rents in central Tokyo, they've shot up by 5.26% compared to last year. That is some serious pressure if you're a company out there looking for a new space.
So you've got vanishingly small amounts of available space, and rents that are just climbing higher and higher. What does that get you? A classic seller's market. Basically, all the leverage, all the power has shifted. Right now, property owners are the ones calling all the shots.
But here's the thing. This isn't just a Tokyo story. Not at all. So, in our next section, the regional recovery, we're going to look at how this same trend is playing out in other major cities all across Japan.
Just take a look at this snapshot. It really shows you how widespread this is. You look at Osaka, the vacancy rate has dropped to its lowest point since early 2021, and rents have been climbing for 9 months straight. Then there's Nagoya, which is doing even better, with 10 consecutive months of rent growth, and the area around the station is especially tight. And get this, even Fukuoka, which is in the middle of this huge Tenjin Big Bang development project, is seeing all that new office space get snapped up really quickly.
So the big question is, why? Is this happening all over the country? What's the driving force behind it all? Well, that brings us to Section 3, and a really important concept called the flight to quality.
Right now, you have to think of the market as being split in two. It's really a tale of two different types of buildings. On one hand, you've got these big, brand new, high-spec buildings with all the modern amenities you can imagine. And on the other hand, you have the smaller, older buildings. And believe me, they are heading in two completely different directions.
I mean, this chart says it all, doesn't it? The vacancy rate for those large, shiny new buildings is just 1.24%. That is way, way lower than for the smaller, older ones. Companies are literally voting with their wallets. They're chasing these premium spaces because, well, they need them to attract the best talent and convince people to come back to the office. This right here is the flight to quality happening before our very eyes.
And listen to this, it just sums it up perfectly. Even when tenants move, the best buildings fill their empty space almost immediately. Think about that. These top-tier buildings, they just don't stay empty. One company moves out, another's knocking on the door, ready to move in. In industry terms, they call this low secondary vacancy. And it's just a huge flashing sign of how incredibly high the demand is for these quality spaces. Okay, so let's take a breath. We've talked about the incredibly tight supply, we've seen how this is a regional story, not just a Tokyo one, and we've dug into this whole flight to quality idea. So, where do we go from here? That's what we'll cover in our final section, the market's next chapter.
You know, if you were to ask for the one big headline from all of this, it's this. The market isn't just in recovery mode anymore. All the signs, all the data we've looked at are pointing to one thing. It's moved past recovery and has entered a real, genuine growth phase.
So let's just quickly pull all the main threads together. What are the key takeaways here? Well, first, Tokyo's supply is critically low, and that's just pushing rents higher and higher. Second, remember this isn't isolated. Major cities across the country are seeing the same thing. Third, that flight to quality is the real engine driving everything, with everyone wanting those new, large buildings. And finally, what does it all add up to? The balance of power has completely shifted. It's a property owner's market, period.
And all of this leaves us with one massive, lingering question, right? With available space, especially the good stuff, at historic lows, what happens now?
Where does the market go from here? It really feels like the upward pressure on rents is here to stay for a while, which is a huge headache if you're a company trying to expand, but it's fantastic news if you're on the other side of the table.
Hey, if you found this breakdown helpful and got something out of it, do me a favor and hit that like button, and of course, subscribe so you don't miss our next deep dive. Thanks so much for watching.